For years it has been observed that countries are tied to one currency, namely the US dollar. The greenback is the world's largest reserve currency, and every country from China to Germany is exposed to the US dollar in international trade. However, there are signs that the world is slowly turning away from the dollar. Over 80 countries, including India and China, do not support sanctions against Russia, particularly in the recent conflict with Ukraine, which is expected to turn around soon. This basically means that many countries have now started to find alternatives to the US dollar. The days of US dollar dominance are drawing to a close. In this video we will reveal what China, Russia and many other countries around the world are doing to prepare for the future. Before we reveal China and Russia's precise strategy, however, let's take a look at the Middle East and examine some recent trends that are threatening the dollar's future. We start with the Middle East because this region has deep financial and political ties to the United States, primarily because of its resources. Saudi Arabia has been the US's main ally in the region for decades, not China. But that has now changed. 20 years ago, US trade with Saudi Arabia was more than 5 times that with China. But as of 2021, trade between China and Saudi Arabia is 3 times the size of that with the US. China is not only the largest importer of crude oil and petrochemicals from the kingdom, but also the largest buyer of crude oil and petroleum products from all Persian Gulf states. Through these positions, China gains incredible influence in the region. It is therefore not surprising that in the future the Persian Gulf countries and China will move away from the dollar and trade in their own currency to better serve their interests. For decades, the US has used the dollar as a weapon to force countries to follow America's agenda. This was particularly evident in Ukraine, where the Western alliance is targeting Russia. Many countries are concerned that they could fall victim to US sanctions after Russia's $300 billion in foreign exchange reserves were frozen by the US and the West. The only option, therefore, is to diversify and prepare for alternatives. The Central Bank of Iraq recently announced that trade with China can now be settled directly in Chinese yuan as Iraq suffers from a shortage of dollars caused by US sanctions over trade with Iran. Last year, the US Treasury Department began enforcing stricter controls on international transactions by Iraqi commercial banks. That means the US government has forced Iraqi banks to comply with SWIFT rules so they can ultimately access their own foreign exchange reserves, much like Russia. It is amazing to think that the United States of America can easily dictate who a sovereign country like Iraq deals with. This is a clear example of the US government using the dollar as a political tool to force change or to their advantage. As a result, Western sanctions against Iran have weighed heavily on the Iraqi economy, with over 80% of daily remittances no longer being able to be processed in US dollars. However, Iraq is not alone. Last year Egypt's central bank announced plans to depeg itself of the US dollar. We've also seen American ally Israel add, also the Chinese yuan, to its reserves. And that is just the beginning. As events in the Middle East show nations moving away from the US dollar, there is another important development to watch in the East. Russia is attempting to replace the dollar with the Chinese yuan. This has significant implications worldwide. But what exactly is happening between Russia and China? And how will this affect the US dollar and our money in the long run? In 2022, global central banks bought gold at an all-time high, and we can see that China and Russia are the world's largest gold producers. Due to Western sanctions, Russia can no longer sell its gold to the rest of the world like it used to. So Russia secretly sold its gold to China to circumvent these restrictions and keep its own economy afloat. In 2022, China's official gold purchases from Russia increased by 67%, but experts believe even more gold was sold to China underhand. Gold is only part of the equation. The other part is the increasing use of China's currency within Russia. According to the Wall Street Journal, Russia is now betting on the Chinese yuan to eventually sidestep the US dollar. Experts are increasingly being paid in yuan, Russia's sovereign wealth funds are increasingly using the Chinese currency, and some Russian companies trade in yuan. Even in the Russian household we find the Chinese currency in a certain way. A chart shows that initially over 50% of Russian exports were denominated in US dollars. At that time, the share of the Chinese yuan in Russian export volume was less than 2%. A short time later, more than 15% were settled in yuan. That's a remarkable increase in a short period of time. It is important to note that Russian banks that are not sanctioned can still trade in foreign currencies, so Russia is not directly locked out of the dollar or euro. But the combination of the strength of the Chinese yuan and the power of gold is the solution. Both China and Russia need to maintain their position in the global order and resist the US dollar and US hegemony. Also, the US-led world order is being transformed by the alliance of Brazil, Russia, India and South Africa, which already represents more than 40% of the world's population. In addition, over a dozen other countries, including oil-rich Saudi Arabia, have expressed interest in joining the alliance. And this is where it gets very exciting as we look at this chart showing the purchasing power of the US dollar over the last century. There we can clearly see how the US dollar has been depreciating more and more and thus becoming weaker and weaker. This is mainly due to the fact that it is not backed by anything. The same also applies to the euro. Many recommend investing some of the money in limited assets like gold or Bitcoin. Because with fiat money, i.e. the dollar or the euro, as many dollars or euros can be created as the governments or central banks need. Richard Nixon ended the US dollar's gold standard. Today we see that no currency in the world is backed by gold. Those countries that have tried to introduce a gold-backed currency have had major problems from the US. An interesting fact about the US is that since 1798, it has conducted 469 military interventions worldwide. Half of these interventions took place in the last 30 years. Given the geopolitical situation, there is now a unique opportunity for China, Russia and the Brics nations to launch their own gold-backed currency. That would be the first time in over half a century that a currency will be backed by the gold standard. It would also mean that there would be immediate leverage against the declining US dollar. Whether the USA thinks that's great is of course another matter. The plan's next step begins in April, when Russia officially launches a central bank-backed digital currency, the digital ruble. 13 Russian banks are ready to participate in a Russian CBDC, i.e. a digital central bank currency. And according to unconfirmed reports, state-owned Russian banks have made their plans for cross-border payments obvious in order to avoid sanctions imposed by the West. China is basically the world leader in central bank digital currency development. According to digital currency industry experts, China is years ahead of both the United States and Europe in the development of central bank digital currency. And this realization has triggered uncertainty in Europe. Therefore, the European Union is now considering launching its own digital central bank currency to counter the technological dominance of both the United States and China. So the European Central Bank is working flat out on its own digital central bank currency as the region tries to protect itself from tensions with China and the United States, as we can see at the moment. MasterCard, Visa, PayPal, Alipay and UnionPay are the top digital payment companies. The first 3 companies are American, and the last 2 are Chinese companies. What we can see here is that there are no European representatives. This, of course, puts Europe in a vulnerable position. And since the relationship between the US and China will probably not improve for the foreseeable future, Europe must reorient itself now. This step of the EU gives us a glimpse into the future of Europe. So basically the probability is very high, if the silent mass accepts a digital central bank currency be introduced, that the future will be more divided and polarized. We could see a transition period where nations around the world continue to use the US dollar without wanting to bet 100% on it and not becoming dependent on the US dollar. Much like a diversified portfolio of stocks, countries around the world are now trying to break away from US dollar hegemony and use multiple currencies or create their own currencies. Many countries are now catching on to the yuan, or waiting for the new currency of the Brics states, which should be backed by gold as a new currency, which of course would offer a very, very big advantage. Other countries, for example, could also try to pair their currency to Bitcoin to ensure its stability. That we could probably see in poorer countries, such as in African countries, or in South or Central American states. The best example of this is naturally El Salvador, which introduced Bitcoin as legal tender. Maybe we'll see another additional currency that Brazil and Argentina want to create too, the SUR. Many countries have now realized how dependent they are on the United States, and how easily, because of the sanctions on Russia, it can simply freeze their money. So they want these dependencies from the US dollar to be reduced. Whatever happens, it remains exciting.
Thank you for watching. Don't forget to like and subscribe for more great content in the future.